Hello, I'm Simon Hedger, Global Portfolio Manager with the Property Securities team at Principal Global Investors. Have REITs stabilised in terms of pricing, and where do we expect valuations to go from here? So the first quarter of this year, we saw a big sell-off in the global REITs market. Not surprisingly, with social distancing measures implemented by various governments around the world, that caused concern for investors as to the impact on revenue for listed real estate companies and potential for valuation caused by the uncertainty over bankruptcies among the tenant line. So we saw a big correction in the first quarter until middle of March, with the subsequent measures put in place by various governments to, in terms of liquidity, pumping liquidity into the system and underpinning wages and salaries for furloughed staff. That brought a bit of relief to the market, and then pricing sort of picked up to a certain extent to reflect that. So we've now got a situation where the sector is trading at around a 25% discount to the underlying net asset value of the assets owned by the various companies collectively. Overall, the market's trading at around a 25% discount. Looking forward, active management is key to stop picking in this sector, picking the right sectors with structural tailwinds as opposed to headwinds. So we're talking about logistics, we're talking about data centres, we're talking about tower REITs, self-storage has come through. There are one or two other sectors where the perception or the headlines don't read well, but we think that there's value already in existence in terms of pricing, so that would include offices, that would include student accommodation, assuming that the new academic year starts on schedule in August, September, depending on where you are around the world, then some of those companies look quite good value at this point in time. So our investment process is based on bottom-up fundamentals. So we look at the fundamentals for each individual company. That is the starting point of our analysis. So we're looking at what is the strategy that the company employs, what markets do they operate in, what are the quality of the assets that they own, and what is the capital structure of that particular company. You know, how much leverage does that company have? And this gives us good insight into how the company is set and how it is likely to fare in terms of the economic turmoil that's obviously now playing through and the recovery that's to come. So in summary, we've examined a number of issues currently presented as challenges for global REITs. But in the longer term, let's reflect on where we're at. If you look at the longer term performance from this sector over the last 20 years, the sector's provided a return of high single-digit total returns, which is very attractive when you actually think about, by comparison to equities or fixed income or other alternatives. So the sector has actually done pretty well over that time period. It's currently trading at around a 25% discount. So as we work through these issues of returning to work and the economy opening up and people getting back to normal, there will be bumps on the road, but this is a good entry point into the sector with pricing where it is. Thank you.